All right. Well, welcome to our first Business 101 interview with the experts. Today, our first interview is with our local small business expert who will be talking about small business lending. This will be a short bi-weekly discussion that the Economic Alliance will be hosting to discuss topics such as small business lending, how to start a small business, business formation, which includes C Corp, S Corp, LLC. What does all that mean? Accounting for your business, and many more. These sessions will be short, 5 to 10 question interviews that we will hope will answer some of your most important need to know questions. We will allow for time for questions at the end and encourage you to reach out to the Economic Alliance and or our industry experts to find out more about any of the topics that you are interested in learning more about. Today, we're going to be learning about small business lending, and we are so excited to have Dominic Flores, Community Banking Officer from Washington Federal Bank, who will be sharing his wisdom and experience working with small businesses within North Central Washington region. Welcome, Dominic. Can you share a little bit about yourself?
Absolutely. Thank you so much for having me on the call. I really appreciate it. It's a great privilege and an honor to be able to share with you from my experiences. So as you mentioned, I'm a community business banker with WaFed Bank. I'm coming up on 3 years with them. I've been in the financial services industry for about 22 years now. I started off in insurance and kind of learned the ropes when it came to business insurance and commercial risk. I transitioned into real estate lending in my early 20s, and for several years I had a real estate license and operated in a booming market back in mid to late 2000s, and so that gave me some fresh perspective on business and sales, and through the insurance experience and through the real estate experience, and then now in banking, I feel like I have a pretty good holistic approach to business in general and how that works. So I feel like I have a lot to offer, and I'm grateful to be on the call again. Thank you.
Well, it sounds like you have the background and the knowledge to help many of our local businesses who are looking to access small business lending. Let's get started with the interview. And today we are going to hear about some of the most common questions that Dominic hears in his role when working with small businesses. Now to our first question. Why are business loans important?
Sure. Great question. Businesses have operating cycles, right? Businesses, it takes time sometimes to convert your product into cash. We recognize this in the banking world, and we refer to business operating cycles all the time. Some business operating cycles take a long time. A manufacturer sometimes it takes maybe a year or two for their finished product. A contractor, for example, that builds a house doesn't often get paid right off the bat. They have processes, they get paid in increments. And so oftentimes they need an influx of cash during that time to be able to sustain. The bills keep coming in. You still have to pay your employees. There's permitting that's required. There's contracts that are in place. There's accounts receivables that need to be taken into consideration as well. And so what we do oftentimes is we provide funding for businesses in that circumstance that allows them the freedom to not have to dig into their own coffers, so to speak, to take money out of their own accounts. Instead, they can utilize credit to be able to pay for these expenses. This is known as working capital. So working capital is very important for businesses to have freedom and flexibility. There's other reasons as well: purchases of inventory, purchases of equipment, for example, that make your working life more efficient and enable you to do more. That income has to come from somewhere. Those funds have to come from somewhere. And if we're able to assist and partner with businesses in obtaining these small business loans, then it's a win-win for us. There's other benefits as well, such as tax benefits. Business owners know that if they purchase equipment and finance it, they can use depreciation in their taxes to kind of offset some of that tax burden that they might get for income that's been generated. So it is important to get loans, and we certainly will talk more about that as we progress in this call, but I would say that business loans are important for those reasons.
Thank you. Can you share with us some lending options for startup businesses, and what are the key differences between business lines of credit, credit cards, and small business loans?
Thank you. Yeah, business loans can be hard to acquire for new businesses. You don't have the history that's required. It's a larger risk to the bank. And what we find oftentimes is that although a business owner might be excellent at their craft, perhaps they don't have the skills to administer the business, which is to say, manage it properly, or manage employees, or manage relationships with vendors or customers. And so it is very difficult. And for that reason, new businesses tend to pay higher rates when it comes to loans. There's some establishments that will offer lending options to new businesses, and they end up paying for it. You pay a higher interest rate than what is typical. And sometimes that's the bullet you have to bite, so to speak, when you're getting started. You pay higher interest rates until you've established yourself, typically for about 2 years. Once you're 2 years in business and you can demonstrate by providing tax returns and other financial statements how the business is performing, then banks are going to be a little bit more lenient and willing to work with you. So I would say that that's an important thing to consider and an important thing to be aware of, especially when you're planning your business. It may be a little bit more difficult to get those types of loans. With that being said, there's other options that are available as well. A business credit card, for example, has different criteria. They don't always look for the 2 years in business. Now, the rate's going to be higher, as I mentioned previously, but it's important to note that they are available to you. And so getting started, for example, with a business credit card goes a long way in establishing your business credit. There's advantages as well. You can find cards that have benefits, incentive programs to be able to earn credits on the side. That's something to note. Once you're a couple years into the business and you start to obtain or look for business lines of credit, you'll be able to see that there are key differences between business lines of credit and credit cards. One key difference would be that the rate is considerably less on a business line of credit. Again, a business line of credit is access to credit similar to a credit card, but it allows the bank to provide funding to you, and it's used as a revolving account. And so oftentimes this type of line is collateralized, which means we use some sort of asset to secure the line, but it gives you freedom to transfer money back and forth from that line of credit into your personal or into your business account, and vice versa. Again, the rates on these are a lot less. There's no fees for cash advances where you might find with a credit card. If you, for example, we're going to go to auction and make a purchase of some sort of equipment, because you get the best deal that way. There's no types of fees for cash advances with business lines of credit. So again, it's really important to note some of these differences. I could give you a long list of some of them as well. I would say credit limits is one thing that is important as well. Like the amount of limit that you qualify for a credit card may be different than a business line of credit. So again, these are just some of the products that are offered. I would certainly think business credit card as a new business. And then as you kind of progress and grow into your business, consider the business line of credit. And again, there's other types of loans as well, like term loans and things like that we can discuss later on.
Thank you. Now that we've talked a little bit about the lines of credit, credit cards, and loans, can you tell us what is a new business who is just starting up, or those existing businesses, what do they need and what kind of documentation is required by the banks to qualify for these, whether it's a loan or a credit card or a line of credit?
Great. Primarily, we're going to look for tax returns, both business and personal tax returns. It's important that you report the income that comes in. I would say one of the key pieces of advice that I give to businesses when they're preparing to obtain a loan in the future is that don't take cash deals. I know that is appealing to some businesses because obviously you avoid taxes in that way. But what we find on the banking side of it is that we can only go off of what's reported. And so if you were looking to obtain a loan for a higher amount, it could be that what you've reported isn't sufficient to qualify for the amount of loan that you're trying to get. So I would always recommend that you are reporting the income that comes in, whether they're deals that someone wants to pay cash for or not. So again, that's one thing. Profit and loss statements. I find that a lot of businesses either don't know what a profit and loss statement is or an income statement, or perhaps they just don't utilize it. If we don't have tax returns, we utilize a profit and loss statement. That is a statement that shows us what income is coming into the business and what expenses are going out. This helps us to understand how a business is performing over the year, right? When we don't have the tax return to look to, we have to look to these statements. And so if you are preparing to obtain a business loan, it's important that you create a profit and loss statement. Now, if you have accounting software like QuickBooks or something like that, it will have built into it the profit and loss statement. So you just have to be on top of inputting information so that the report is up to date. But your bookkeeper or accountant can offer the services as well. It's just important to note that when it comes time to obtain a loan, what I'm going to ask for example, would be your tax returns and your profit and loss statement. Another document that's required is a business balance sheet. Now, business balance sheet helps us to find out what the business value is, what the net worth of the business is, and what it illustrates for us is what the assets are for the business. So cash on hand, for example. There's other things like assets, so fixed assets, inventory. All of these things are going to be displayed on your balance sheet, and it's going to help me to see what your value is. What it also shows me is what your debts are, so what business debts exist. And so we're able to look at your assets and subtract your debts to determine what the equity in the business is, that is the net worth of the business. And so it really is important to us to understand this. For example, on your business balance sheet where it reflects what your cash on hand is, if we're trying to determine whether or not your business could sustain in slow times, for example, whether you have the cash to be able to cover shortfalls due to unforeseen circumstances, we're looking to your balance sheet to determine that. So again, this is a document that you can find templates for, even on Excel. You can type in business balance sheet. And so if you don't have someone to do this for you, you can certainly look to those type of programs to find it. But your bookkeeper or your accountant can assist you with that as well. Again, profit and loss statements and balance sheets are essential. We're always going to look for them when it comes to business lending. And the last thing would be a personal financial statement. This helps to show us, in the same way that the balance sheet reflects your business net worth, the personal financial sheet will show us your individual personal net worth, and that shows us cash on hand, marketable securities, real estate, personal property, and it also shows us what type of debts you have, whether it's credit card or loans or boats or whatever, and it helps us to determine where you're at financially and whether or not you can afford to add additional debt service to what you're already paying. So I would say that those documents are the key documents that we need whenever we're accepting an application for a business loan.
I just have a follow-up question to that. And this is something that we have businesses ask us, especially new businesses that are coming in who want to start up, is how long does a business, I know that it varies throughout financial institutions, but what is a common time period that a business has to be established to qualify for, whether it's a credit card or a business loan or a line of credit?
That's a good question too. And it is important that you have industry experience, and that's what's key to us. So we typically like to see 2 years in business. And the reason we like to see 2 years in business is because then you'll actually have the tax returns that are required for us to be able to review, and the income statements for us to reflect on, to look at what historically how your business has performed. Historical income is equally as important. We don't use IFCOM, which is to say income that you may earn in the future, right? So we talk to businesses a lot and they feel like their business is having a banner year and the projections for how their business is going to perform is phenomenal. And so they're excited about the notion of obtaining business financing. But what we have to go off of is what's on paper and how your business has performed historically. So with the 2 years in business, it gives us that opportunity to evaluate what your business has actually done. Now, we do make exceptions from time to time when it comes to industry experience. And so if you, for example, have been a general manager at a restaurant and you've been managing employees and you've been managing inventory and making purchases, and so you understand the ebbs and flows of the business, say the owner is kind of like a silent owner and you run all the day-to-day operations, and then you decide to branch off into a new business, that may be a little bit different. If the income that you have on your personal tax returns is sufficient to cover the debt service that you're looking to add, by obtaining a new loan, we may consider that. We may consider that industry experience, but the rule of thumb is always going to be that we want to see business tax returns from an established business for 2 years. And so the exception really is that. It's an exception that's not granted to everyone, but certainly there is room for that.
Thank you. Can you tell us what are the 5 C's of credit and how do they apply to small business?
Absolutely, yeah. 5 C's of credit. Sometimes it's whittled down to 3 C's of credit, so you might have heard that in the past. But 5 C's of credit are essential for us as bankers as we evaluate a risk or a client. The 5 C's of credit are character, capacity, capital, collateral, and conditions. Character refers to your reputation. It refers to, how you interact with other businesses, how you carry yourselves. The reason that this is important to us is because it's an indicator for how you're going to treat our relationship. Your credit score actually falls under the category of character. And the reason is because if you make an obligation to pay a loan and you don't pay it, that's a reflection of character. Now, obviously, there's unforeseen circumstances or extenuating circumstances that can lead to not paying debts. And we understand that, and we'll look at that as well. But overall, your credit score is a reflection of your willingness to pay on debts that you've agreed to. And so, again, we use that as a measure of character, and that's really important to us. You may look fantastic on paper, but if no one wants to do business with you because of how you carry yourself, or you're not trustworthy, that's a huge red flag for us, and it's important to note as well. We can decline a loan based on the character and reputation of an individual or a business. So important to understand that. The next one is capacity. Capacity is really important because that deals with your ability to repay on debt. If we're adding additional debt to you by giving you a loan, are you going to be able to cover the expense? Is your cash flow sufficient to be able to cover what you're looking to add to your books, right? So the capacity is a key element for us. Again, we look at historical cash flow and current cash flow, and we will also look at projected cash flow, but it is obviously important to us that we make sure that you do have the capacity with your current earnings to cover additional debt. The third C would be capital. This refers to equity invested in the company. It refers to your liquidity as a business. Do you have cash on hand? Do you have current assets that you can turn into cash by selling them in order to be able to cover debt payments, right? So capital is really important for us to understand, can a business survive in slow seasons? Where are you guys at with regards to down payments? For example, a down payment on a commercial real estate loan could be 25%. And if the purchase price is $400,000, for example, you're bringing in $100,000 to closing. And so that's important to understand and recognize. The next one is collateral. The next C is collateral, and that refers to your ability to secure a loan. Now, most business loans are secured by some form of collateral. That is, whether it's real estate or business assets, you're offering up these assets of the company to secure the loan in case you default on a loan, that is to not make payments on it. The bank has the ability to recover some of those losses. And so collateral is really important for us to evaluate when we're looking at providing a business loan. The next thing would be conditions. Now, there's certain conditions to loans themselves. That's the interest rate, the term of the loan, also the principal balance amount. Those are important conditions of a loan. But we look beyond that too. We look for market conditions. Is your product competitive? What type of market are you in? What is the economy doing? That's an economical condition that we look for. And we also look at industry risk. Some industries, for example, during COVID, took a really hard hit. The hospitality industry, for example, with hotels and motels, took a really big hit. Restaurants were closed down as well, and they found several restaurants closed down because they weren't able to sustain. And so as important as all these other C's, it's important for us to understand the conditions and the market that we're offering the loan into. So those are the 5 C's of credit. We look at them with every single loan. It's important that we evaluate all these different factors to make sure that what we're offering to you is a quality loan, and we're making sure that we're protecting ourselves as well.
Dominic, a little follow-up on that question. We have businesses, especially our new startups, who come into us and we meet with them, and there's always a question about what is considered collateral and what does that mean? What happens if they want to trade their car in and it's listed as collateral to the bank? How does that work? And can you give some examples of that?
Yeah, so when you have specific collateral that's listed, you said car. Through WaFd Bank, we don't utilize cars as collateral, but tractors, for example, if you're a farm and you have a bunch of pieces of equipment, there's a couple different ways for us to do that. If we secure a loan with a specific piece of collateral, so let's say it's a tractor, then you can't sell it. It's similar to a car loan, right? If you sell it, you have to pay off the debt, and that's how that works. But more often than not, what we do is we file what's known as a UCC, or a Uniform Commercial Code filing with the state. Now, what this is it's a blanket lien on all of your business assets. Now, some banks may require you to provide a list of all of your assets. Generally, it's not required. And so as long as you maintain in collateral or in your business assets a sufficient amount to cover the debt, so let's say that your loan was for $25,000, as long as you maintain sufficient collateral or business assets to cover that $25,000, then you can sell what you need to sell and buy what you need to buy during the business course of operations for your business. And it's not required that you report that. And so again, the more common type of collateral is through this UCC filing. And the only imperative is that you have sufficient business assets to be able to cover the loan request or the loan amount that you've requested. Hopefully that's helpful.
It is, thank you. Can you tell us when someone applies for a loan, is it in the business name or is it the business owner, or is the business owner liable?
Yeah, that's a good question as well. Business owners are savvy, oftentimes wanting to protect themselves. I know in your future calls, you guys will talk to professionals with regards to LLCs and limited liability companies that businesses create to defer liability to keep themselves liable to or not liable for lawsuits and things like that. When it comes to business banking, 9 times out of 10, individuals personally guarantee the loans. This is really important because I feel like a lot of businesses think that the loan is under the business name, and so therefore they're not personally responsible for the debt, and that's just not how it works. We need personal guarantees on most loans, and so what goes hand in hand with that is that your personal credit is equally as important as your business credit. And so we'll look to personal credit and we'll look to personal assets to be able to support a loan. And so that personal guarantee works as such. It becomes a recourse loan to you. And that is, there are certain things within the industry that we discuss, and that's can a person with their personal liquidity cover a certain amount of debt service. So when I refer to debt service, I'm referring to an additional payment for debt that you're having to make for a loan that you've acquired. And so we'll look to personal net worth and personal liquidity to see if it supports the business to be able to pay back these loans. And so these recourse loans is what we offer, because what it means is that we have the ability to go after individuals as well as businesses to recover our losses if a payment isn't made on the loan. Banks typically have what's known as a right of offset as well, which is to say that, if you have defaulted on a loan and you have bank accounts as well, they have the ability to go to your accounts to take money for the payments that you owe. Now, obviously, we're hopeful that this type of thing never happens, and that's part of why we establish these 5 C's of credit, because what we're trying to do is our due diligence to make sure that the type of clients that we have are clients that are honest and willing to repay on debt, so that we never put ourselves in a position where we have to go after personal assets to recover on a loan. But it is important to understand that almost all business loans are personally guaranteed as well as the business guarantee.
Just to follow up on that.
Sure, yeah.
Follow-ups, I'm sorry.
No, you're fine.
But we get a lot of questions, as we're working with businesses. And I think that, while we have you here, we want to make sure that we get as many questions answered as possible to help our audience. But you were talking about, we've talked about credit a couple different times. For a business loan, what is the credit scores that you're looking for that business owner to have?
Sure. Yeah. So again, we primarily look to personal credit, and personal credit scores for us needs to be in the range of about 680. And so, if there's multiple business owners and let's say one of them is a little bit less than that, but another does have 680 or better, we're willing to work with it. But I would say 680 is a benchmark score for individuals. Now, when we talk about business credit, it's important to understand that there is a difference between business credit and individual credit. However, most companies don't have a business credit score or a business credit report. Okay, so what we look for is we look for your individual credit score and your history. Now, if you do have business credit cards, for example, if you have loans into the business, we'll certainly take that into consideration. But there's a lot more factors that go into a business credit score than just you repaying on debt. Some of the things are the length of time that you have in business. Some of the things have to do with the industry that you're in. And so those things affect your business credit score as well. So to answer your question specifically, on a personal basis, the individual credit score needs to be 680. For a business credit, again, we don't have a specific metric for what we use to determine the score, but we use a lot of factors in determining whether a business is creditworthy as well.
Thank you. And to our final question, Dominic, can you share with us what are some of the strategies that small businesses should use to ensure that they have a successful loan application?
Yeah, I would say plan for the future. Perhaps some of the information that we're discussing right now is new to you as you're listening to this. You should sit down with a professional. You should sit down with someone such as myself, someone such as the Economic Alliance, right, to be able to understand what's required. So you have a business plan, but maybe you need some help in learning how to get there. And so I would say that you manage your credit well, understand the credit implications. Credit has so much to do with what we're looking for. And so start to understand if your credit score is low right now, and when I mentioned 680 score, maybe you've already disqualified yourself. It's important to take steps towards fixing that. And there's different ways that they can do that. And there's credit counselors that can help you with that. But those are important things. Maybe take a glance at the future and think about what your lending needs are going to be in 5 years or 2 years or 1 year, and take steps towards that. Talk to people who are experts in the field that can help you to get situated and established, because what the funding does is it frees up opportunities for you to grow your business and to be able to get to where you want to be. The other thing I mentioned previously with regards to taking cash deals, I just want to reiterate that. I think it's important that you understand is that the banks can only see what we see on paper, what you're reporting. And so it's important that you have a conversation with your accountant as well, because oftentimes when you get your taxes done, they'll ask you what your objective is. And if you state that your objective is to obtain financing through a bank for an equipment purchase, for example, or to purchase a piece of commercial real estate, the way that they structure your tax returns will reflect that. And I think that's important to note as well. And I would say that the last thing is to just be transparent. It's a partnership as far as I'm concerned. I'm a relationship-based individual, and we're a relationship-based bank. And so what we really try to do is kind of understand and walk with you as you grow, from a small business to a larger business. And the transparency allows us to be able to work with you seamlessly and make recommendations for how you can grow your business. So be open, be transparent, understand that we're an advocate for you and that we want to help you to get to where you want to be in business. And I would say that that's the type of advice I would give to anyone who's looking to obtain business financing in the future.
Thank you. Well, I'm going to give people a few more minutes. If you have any additional questions, anybody who's on our Facebook Live, if you want to ask anything, please add that to the chat. And in the meantime, while we wait, Dominic, if somebody wanted to get a hold of you, I know that you provide services throughout the North Central Washington region, but what would be the best way to get a hold of you?
Yes, I'm available. You could find me on our website at wafedbank.com. You could look up community business bankers or business banking, and you'll find my name in the region that you're in, which is Central Washington. And so other than that, you can call me. My phone is available to you. A good contact number would be 509-771-9444. You can also reach me by email, which would be Dominic, Dominic.Flores, Flores, at wafed.com. That's WAFD.com. I'm very responsive. I want to provide information as often as possible. So if you're just looking to obtain some preliminary information, even if you're not ready to move forward with a loan, I'd be more than happy to sit down and converse with you and let you know what options are available, and at least set you up to succeed later on down the path if you're looking to obtain a loan.
Well, thank you. Thank you so much for taking the time. Right now, I don't see any questions. I think that we were very good with our, sticking to what we had talked about and provided a lot of information during this half an hour little segment. So I just wanted to thank you again for taking the time to be a part of our Business 101 interviews with the experts, and for being our first interviewee. This was a big thing for us, and we wanted to make sure. We know people don't have a lot of time to step away from their business to gain some of this information. So we wanted to put this out there in a short manner that would be more reasonable for somebody to sit down and listen to. And I just wanted to give you the opportunity to share, is there anything else that you would like to share with our audience today?
I would just say use your resources that are available to you. Lean on people who are willing to help. There's again, the Economic Alliance is there for you. I'm there for you. There's other people that are interested and invested in your success as well. So feel free to reach out. You don't have to be in business alone. We get to work together to grow, and there's people who've gone before you that have significant experience that can aid you in becoming what you want to become as a business. And so feel free to reach out. And I appreciate the opportunity. Thank you guys so much. It's been a great privilege.
Thank you. Well, I'd like to thank our audience, and I want to also let people know that this will be available on our website, as well as we'll share the video on our social media. We're also going to be offering the same conversation in Spanish, so that will be posted later on as well. And I just want to remind everybody, the Okanogan County Economic Alliance is the Small Business Development Center. We provide one-on-one confidential free small business assistance. So if at any time you're interested in having a discussion, if you even are thinking about or have an idea about starting a business, feel free to give us a call. We also have our Small Business Resource and Technology Center, which we have workshops on helping businesses get prepared to move their businesses into the e-commerce, Etsy, Shopify, Facebook, developing a website. We have workshops for all of those, and we can provide those as well on a one-on-one business basis, and we can go into your business and work directly with you. We've got computers available for businesses to come in and utilize. We've got conference rooms that people can come in and access. And then if you have challenges with accessing technology, we also offer digital navigation to help teach people from the ground up on how to utilize technology. So please, if you're interested, give us a call, 509-826-5107, or you can contact me, Roni Holder-Diefenbach, at 509-826-5107. I think I just said that. At Holder-Diefenbach at economic-alliance.com is my email address. So thank you very much for being here today.